Greetings, investors, and thank you for tuning in to Markets Decoded, where we decipher the current markets so you can take actionable investment steps. I'm Jake Ackerman with Ackerman Financial Group, and today I have joining me the commercial real estate expert, Michael Monteclaro with Klein & Hutchins. Thank you for joining me.
Hey, thank you for having me. Great to be here.
Michael, been asked a lot about the rising interest rate environment. The current rates, I believe in the commercial real estate, according to CNBC, we're looking at a little over 7%. So, how are the interest rates rising affecting the commercial real estate market to your prospective investors?
For the investors, it's changing the dynamic of acquisitions. We have a lot of investors who are sitting on the sidelines with cash and are kind of waiting for the opportunity. They feel the market is still going to dip down a little bit further, and people who are leveraging out their deals are very hesitant. However, there is an exception that owner-occupiers still benefit from purchasing properties as opposed to leasing, because we're seeing right now lease rates in this market are just as much as mortgage premiums, mortgage payments.
So you're recommending that there is still benefit to purchasing commercial real estate, but the benefit would really be for the business owner.
Absolutely.
The business owner buying his or her space, and then instead of pouring equity into someone else's pockets, they're going to put equity back into their own pockets, and then perhaps another opportunity would be to lease out, maybe have multiple units and lease them out. Is that what you're referring to?
Yes, absolutely. Have an investment property, they can occupy one space and then lease the rest of it out, where, tenants could pay for the note on the building.
So they're gaining appreciation, and possibly if they have multiple units, they're going to put some, not only get their space paid for, but possibly put some extra dollars in their pocket, so that makes sense. Even where rates are right now, that's what you're seeing?
Yes, absolutely.
Okay.
It's still beneficial to own for owner-occupiers as opposed to leasing.
Okay. Besides interest rates, what else is affecting the commercial real estate market?
One of the things that we're seeing is the rise in commercial property insurance. With the advent of Ian coming through Tampa Bay and the destruction that it caused, insurance companies are putting a premium on insuring commercial properties, sometimes even doubling those premiums. And it's been a challenge to find insurance for commercial properties.
Okay. So that's the other issue is insurance costs. So that's the two dynamics right now affecting the commercial real estate: insurance cost and the rising interest rate environments. But again, still beneficial for the property owners. That's going to overcome those two added risks.
Absolutely.
Okay.
Another threat that I actually was thinking about that is affecting commercial properties is the rise of inflation. As you know, inflation is making everything more expensive. And for the lessee, it is not as beneficial. For the landlord, they don't necessarily mind it because it passes on through to the tenants. But still, with inflation, the cost of maintenance across the board, it's becoming more expensive to lease out a property. And again, this is the reason why it's beneficial for buyers. Even though interest rates are a tad higher, they're actually normalized now to pre-pandemic rates. Okay. It's beneficial for them to, again, create equity for their own good. And
they could always refinance if rates do come down.
Absolutely.
Okay. So Michael, how does the supply of commercial real estate in the Bay Area market?
It is a steady supply, albeit products are coming online more slowly as opposed to 2 years ago in the 2020 heyday of I can sell my property and get a premium on it. We are seeing a lot of properties still in high demand, though, regardless of what the situation is. For some reason, industrial properties are very hot, almost freakishly hot. I've seen industrial properties come online and within 2 weeks close with contracts. Another product type that we see that is very hot in that sense is retail. Retail has been hit really hard during the pandemic, almost died, I would say. A lot of shops did close. But life is going back to normal. People are venturing out into the world and they're going shopping. They want, the tangibility of touching things. And so they're going to stores now, they're going to restaurants, and they're feeling more comfortable. Another product type that we see, and I'm sure you can attest to it too is the amount of multifamily apartments that are increasing here in the Tampa Bay area. In Tampa Bay, for some odd reason, everybody wants to move here. It's, again, freakishly high. There are so many apartment complexes coming online. Developers are creating so much space for people to live in. And what that's doing is it's, driving more population growth. I think the last I heard was some 1,000 people are moving into the Pinellas area every month. So population is definitely increasing.
Biggest migration we've seen in the I believe the history of Florida, what the data statistics said over the last couple of years. And it may be slowing down some, but the migration is still heavy into our area. Fantastic area to live.
Absolutely.
Now, Klein and Hutchin is a brand that everyone knows around here in the Bay Area. A great commercial real estate brand, a prestigious name behind it. They may know the name, but what makes them so unique? Why would I go with Klein Hutchin and it maybe not Bob down the street?
Klein & Hutchin, we're a boutique firm. We specialize in all things commercial real estate, anywhere from vacant land to leasing office space to investment properties. We do everything commercial under the sun. What makes Klein & Hutchin a unique value proposition to the local market here is the expertise. So in our office, we have brokers who specialize in multifamily, brokers who specialize in land development, brokers who specialize in office leasing. So with this amalgamation of different people coming together, we're able to deliver a product or end result for the user, and that's most beneficial for them.
So you guys are laser focused on commercial real estate, whereas Bob down the street may be a real estate broker for both residential and commercial, so their expertise may be spread thin, where you guys are hyper specialists on commercial real estate and getting your clientele the most information that they possibly can have to make that investment decision the best of their ability.
Correct.
Okay. Let's get a little bit further into that. What do you do to help your customer?
My goal is to help people in their commercial real estate needs, whether it is to find lease space for their business or to acquire an investment property. I can help them decipher the metrics of what a property can put out in terms of dividends. I actually specialize in that. I also help developers acquire land and help them decipher what the local municipality and or the city would require to develop on that land. So there's a lot of things that I do in terms of helping people, and the end goal is actually to help people in whatever capacity that I can for them.
Okay. Well, Michael, thank you very much for answering my questions, providing some of your expertise on what's going on in the commercial real estate market, and then letting us know a little bit about Klein and Hutchin and how they're going to help prospective commercial real estate investors. So thank you for joining us on Markets Decoded. I'm Jake Ackerman. Until next time.